Hello, everyone. My name is Peter Kincaid. I'm the CEO of Raintree Capital Inc., the holding company of the Raintree group of companies, one of which is Raintree Wealth Management. And today I'm joined by Greg Bainbridge, our Chief Investment Officer and our Chief Compliance Officer, to give us a little update on RWM. Greg, how are you doing today?
Great, thank you. And thanks for having me on.
Absolutely. Greg, let's just start off with a quick overview on Raintree Wealth Management.
Sure. So Raintree Wealth Management is a fully managed portfolio management company, meaning we provide clients an end-to-end solution. We do that on a discretionary basis, meaning we manage that portfolio within the guidelines we set with clients, as opposed to providing just transactional buy-sell advice to that client. So it's really much more of a fully managed service than transactional recommendations.
Got it. So last 6 months have been pretty exciting here in the financial markets and the equity markets in particular. Tell me about how that experience has gone for Raintree Wealth Management and probably as importantly, your clients.
Has it only been 6 months? Because it feels like maybe 6 years.
Yeah.
Coming into this year, we were very defensively positioned, and what transpired in the first quarter in March in particular, we saw a massive sell-off, obviously sparked by the pandemic. Our portfolios did very well through that time. In the case of our growth fund, we were actually down less than 8% compared to a lot of the others in the market, down closer to 20, 25, 30 in some cases. And so we were able to really preserve and protect capital for our clients through that period. In addition to that, we were very busy as an investment committee. We met multiple times, even weekly, to talk about how we wanted to reposition our portfolios. And over that time, throughout March, we made a number of changes. And at one point, actually, on the March 23rd, which ends up being the bottom so far this year, we made a massive reposition for our clients of over 10%. And we did that for all of our clients within one afternoon. And I think that speaks to how dynamic our platform can be in terms of capturing or taking advantage of these volatile markets.
That's really great. So now we're, I think, about 6 months into it. The markets since March 23rd have, at least the equity markets again, and it's particularly the North American and US equity markets, have come roaring back. But for this month, where we've seen another correction again, where are we at in the market, and how are you positioned? How is the firm positioned? How are the portfolios positioned for its clients?
Yeah, I mean, I think that's the question on everybody's minds right now, right? Is where do we go from here? And in our mind, I think probably the best way to describe the market is very precarious. So there are a number of risks facing financial markets today, which leads us to believe that there's more probability to the downside than there is to the upside. We think markets are very expensive. Their valuations are at very high points. There's a number of political risks on the horizon, including the Chinese-US relations, the election that is looming in November, and that is furthering the risk of fiscal stimulus now that seems to be in a gridlock with Congress. And so for all those reasons, we think now is the time to be taking a more defensive stance again in portfolios, as opposed to looking to put risk back on the table.
So defense in the public equity market sounds to me like buy a bunch of bonds. Is that what we do?
Yeah, defense doesn't have to mean conservative. And so the way that we approach defense is finding strategies that aren't necessarily linked directly to the outcome of the broader market. In our portfolios, we use what's referred to as absolute return strategies to accomplish that, where we want to earn a reasonable rate of return, but we don't want to take that same market risk when allocating to that. So it is a bit of a unique, innovative way to allocate in the portfolios, particularly in the retail portfolio management space.
So you mentioned elections, and we're heading into a cycle. Are you just making big bets on who's going to win the next election, or how do you set this asset allocation?
Yeah, that's a good question. I feel like a lot of folks in the market today think that after November 4th, on November 5th, there's going to be this massive change in the markets, either up or down, once we know the outcome of the election. I don't think that's likely the case. I think what we're going to see is more volatility as we approach that date. But it's also important to remember and keep in mind, and particularly how we look at it as an investment committee, is to be able to set levels and set decisions in advance of those changes. For example, we know that at certain market levels, we either want to be buyers or sellers. And having that plan in advance really helps to take the guesswork or the emotional effect out of the decision as much as possible.
Greg, thanks for your time today. For those interested, we're going to be hosting a webinar in the coming weeks. We hope you'll attend that. And I appreciate you taking the time to walk through this with me, Greg. Thanks.
My pleasure. My pleasure. Thanks, Peter.